This is a market preview. Thanks for joining us at XM.com. We'll be looking at the Federal Reserve policy meeting coming up on Wednesday and the outlook for the dollar. I'm Cristina Marujas. With me today is Rafi Boyajian, our lead investment analyst. Rafi, the Fed meets on Wednesday. Chances for a rate hike are very low at this meeting, so interest will turn to the updated dot plot. What do you think policymakers will signal?
Well, Christina, as you said, we've got a very low chance of seeing a rate hike in September. Heading into the meeting, we did see a number of Fed officials signal that they would favor pausing in September. So the question now is, what are policymakers going to be signaling about the likelihood of raising the median dot plot for 2024? So back in June, when we had the last dot plot, we did see Fed officials pencil in around 100 basis points worth of rate cuts next year, based on one more rate hike in 2023. Now, the markets lately have started to scale back somewhat the rate cuts for 2024, but still we do have around 90 basis points worth of rate cuts priced in. So there's plenty of scope to see a reversal in that should we see the Fed come out and signal the higher for longer case, because of course the US economy, although we are seeing some signs of a slowdown, finally we are seeing the labor market cool off a bit, but there's still some way to go before the Fed can be more confident that we don't have a risk of wage growth remaining persistently high. Consumption has been very strong during the summer. How much is that going to moderate over the coming months? So the Fed will probably want to see a bit more of a slowdown in the economy, and also inflation to fall a bit more as well, because in the last couple of months we did see CPI edge higher. Although core inflation, core CPI has fallen, core PCE has not really fallen that much. So I think there's a very good chance that the Fed is probably going to, even if they don't commit to one final rate increase later this year, they're probably going to try and make the case for higher for longer by projecting a somewhat higher rate path for 2024.
And now let's turn to the market reaction. The dollar has been riding high the safe haven and rate differentials wave. How can we see it perform this week?
Well, the dollar has been doing rather well lately. Yes, as you said, there's a bit of safe haven demand because of the growing risks, downside risks, as far as Europe and China are concerned. But the US economy, even if it is impacted by this, growth risks, for example, we see a steeper slowdown in the Eurozone, and in China we see oil prices surge even more. Of course, all of those things would impact the US economy, but the US is in a much stronger position, and it would still fare a lot better than its counterpart. So that's what's kind of been supporting the dollar lately. And even if the Fed doesn't raise as we were just discussing, the Fed may opt to keep rates high for longer next year. If we don't get many rate cuts, then again that would be supportive for the US dollar. But there's also a risk that the economy may not be, or this monetary policy may not be tight enough, because some indicators suggest that the Fed does really need to tighten more. So clearly there are some decent upside risk for the US dollar, and even if the Fed does come out sounding not quite as hawkish as many analysts or traders are expecting, I think any sell-off in the dollar would be temporary. Now, of course, given the recent gains we've seen in the greenback, it's quite likely that should the Fed sound somewhat less hawkish, that would spark short-term downside, short-term sell-off in the greenback. But I think over the medium term, I think there's plenty keeping the dollars supported.
Rafi, thanks so much. The September meeting of the Federal Reserve comes up on Wednesday. This was a market preview. Thanks for watching at XM.com.